our venture lens model for how to create startup ecosystems from scratch. As I introduce myself, I hope this initial context will be helpful. 8 years ago, I co founded a company, Generator, whose mission is to be the best partner for communities to invest into themselves. We believe communities that are the most passionate about their next generation give themselves and all of us the best chance of success. For the first 3 years, it was a love letter to our hometown in Milwaukee and Madison, where we just worked with 10 startups a year to help them get off the ground, incorporate, get their first customers, and grow. 9 years later, we've grown to a staff of over 70, an international program of over 45 accelerators in 24 plus cities that last year graduated 200 startups alone. We've had to build a lot of communities from scratch as we entered cities as small as 10 or 20,000. And we believe this model is a consistent and sustainable way for communities to engage themselves in creating wealth and jobs. And what do we mean by a venture model for economic development? What is the venture lens? Well, at a high level, we believe the venture lens is a way to use venture capital to create wealth and jobs and leaders. We believe communities can sustainably, profitably, and consistently invest into themselves. And when they do this, we believe they will create a unique model for how to create change, wealth, and leadership in their community. As simple as this model may sound, in our 9 years across 24 cities and all the world travels that we've found that it is not a remarkable school of thought that has been adopted as a way to transform communities. We hope this presentation will be a step forward for communities to catalyze the simple 1, 2, 3s of this model in engaging themselves in transformational change. The reason we believe this discussion is so important is not just because of the need for wealth, jobs, and leaderships at a global level. We believe that it is a manageable, milestone way for communities to hold themselves accountable for change. We believe with a venture lens model that will be discussed below, over a 48-month period, communities can leverage these efforts into sustainable gains in startup and venture activity. We believe with the venture lens model, the initial efforts to transform the community will produce remarkable companies. And just as importantly, we believe these initial efforts will pave the way for companies long after to grow and thrive in the place where they are. To introduce ourselves and our context, Generator, as I mentioned, was started 9 years ago. Today, we try to do well by doing right. We operate 45 accelerators across these 24 plus cities, and we're growing quickly. The 200 startups we're going to graduate in 2021 are up from just 100 startups in 2019. Our graduates, our 500 plus graduates, have raised over 500 million of financing. They create almost an equal amount of revenue on an annual basis, and they employ over 5,000 people. What we're proudest of is the rate of change. In any given month, our companies are creating well over 100 jobs, millions of revenue, and raising tens of millions of additional growth capital. This activity has earned our company a top 15 accelerator ranking in the Seed Accelerator Rankings project consistently. Notably, we're the only ranked accelerator that's not in a top 4 venture hub. When we operate in these 24 cities, we're operating in markets like Cleveland and Cincinnati, Toronto, Houston. Every dollar that our graduates have raised from us, they've gone on to raise $30 more in follow-on capital. We're usually the initial and exclusive investors, so we take a lot of pride that the dollars we invest, the companies we invest into, and the founders we believe in are able to grow into successes that go far beyond the scale of where we started. And we do well by doing right with our fund. Our venture returns are top quartile. You can sustainably and profitably invest in just about any community. We think too many communities are missing this, not because it's not possible, but because we choose not to try. That's the Generator thinking. Our values go beyond place and into race and gender. We've done what we can to reflect the status of our community. It's in our mission. If we're not inclusive, we don't live up to it. 30% of our founders are Black and Latino. Those numbers are increasing year over year. 25% of our founders are female. We know we need to increase this number. It's overrepresented in our applicant pool, but not nearly represented enough in the general population. We're trying to do better. Those same metrics hold in our staff. We believe that communities can succeed not despite inclusion, because of inclusion. And we think that any model or attempt at a venture lens has to understand that this inclusivity is a fundamental component of getting it right. Why are we talking about venture capital at all? The importance of venture capital cannot be overstated in the last 50 years of economic development. As civic leaders, business leaders, economic development leaders, community leaders, any discussion of transformational change at an economic level requires at least some decision on whether venture capital plays a role in your community. It can't be a default. The industry is very small. It's just 0.19% of GDP. It's often confused with private equity, but it's a fraction of that industry size. And yet, when you look at the change economically in the United States alone over the last 50 years, roughly half of the IPOs in the market today come from companies that raise venture capital. They represent over half of the market's market cap as of 2015. These numbers have only grown year over year, and we believe in 2020 and 2025, the dynamic that makes venture capital important in our community, in our country, will only require a further, harder, more important look at what role it can play in your community. If you're avoiding a discussion about how to bring venture capital to your community, we believe that decision will not age well. But venture capital is not a parochial model. One way to think about venture capital in the role of those publicly traded companies I just discussed is that typically for every $4 of wealth you want to create through a venture capital backed startup, you'll need at least $1 of venture capital. You could think of it like if you'd like to build $1 million house, you're probably going to need at least $250,000 of raw material and labor. And that money's required early. In the first 2 to 3 years, it might be a 3 or 4 to 1 ratio. So as you're thinking about how to get a venture capital ecosystem started from scratch, we believe this discussion must be framed at the outset as a discussion about network. Our economy is increasingly networked. The digital age depends on network, and how we design economic solutions to create wealth, jobs, and leaders must reflect this network mindset. As a result, as we describe and introduce the venture lens model, we believe that the fundamental foundational piece that we have to understand as a design component is that it has to connect, venture capital in our community has to connect to other ecosystems and hubs in order to help our startup succeed. Any parochial model, any decision to limit the scope of our engagement to the city borders that we live in is by default a suboptimal decision. Venture capital does not drive growth equally. And this is, I think, why we have to have this presentation in the first place. Venture capital is a growing market. In the last decade, it added over $100 billion plus in activity. But 50% of venture capital takes place in just 5 cities. Not just on place, but on gender. Only 2.7% of founder teams are led by female founders. And the numbers on race, and you can view this through the gender lens, as I think the most concerning of all. Only 0.37% in the United States of venture capital went to Latina founders and 0.27% to Black women founders. This asset class is powerful. It's growing. Its importance is getting more and more significant. And yet we're less and less capable of driving the inclusive growth our republic and our world need in order to succeed. So now, in light of this powerful asset class and yet its incredible faults, what do economic development, community leaders, business leaders do to approach solving the problem within their own borders? We believe that there are 3 simple steps that a venture lens requires from community leaders. The first is that they consider investing small sums into emerging fund managers. Economic development on an annualized basis, just in the United States, is a $55 billion a year industry. Across those 50 states, we're looking at $1 billion plus per state. The global numbers are comparably significant. For a community to decide within that framework that a fraction of this should be dedicated to local emerging managers should not be a difficult decision. Second, while we believe there are many models for how communities can do this, including evergreen funds that reinvest proceeds back into the community, the 2 critical design components of whom to invest in are as much about how they invest. Emerging fund managers should be investing locally and inclusively. If those 2 requirements are met, And a shocking number of current venture lens like efforts do not require this. This is the difference of kind that the venture lens presentation we're making hopes to draw attention to. We believe that the second component is there. And then finally, we don't hear this part discussed enough, and we're hoping to use this presentation to draw attention to it. Business management tools in venture capital have changed significantly in the last 5 years, much less 10, 20, and 30. Best practice in our industry continues to evolve. And as communities seek to enter the venture capital discussion, educating and networking their managers is as much about those managers and those startups' career developments and trajectories as they are about the well being and success of our communities. Bringing local venture managers into national discussions around venture capital should be viewed in the same way that trade missions and other efforts at reshoring or offshoring economic development play into a community's budget, priorities, and mindshare. How we educate the next generation of venture capital managers globally is one of the most important decisions we make, alongside of committing to invest in them at all and committing to invest in them locally and inclusively. We believe the venture milestones, the venture lenses milestones in community development offer one of the most exciting ways to think about the next generation of accountability, transformational change, and economic development. We see a lot of models for capacity building, for inventory, for rallying and convening resources in a community. We believe that the venture lens thinking around how startups grow and how venture capital plays a role in facilitating that success offers the next generation of economic development paradigm and thought. In a lot of communities that we work with globally, they fall into 5 buckets of annual venture activity. The first is the default, where communities don't really have a venture strategy. They're typically seeing startups in their communities raise less than 10 million of annual venture capital. Only a handful of startups at best are founded in that community, and the annual jobs created from those efforts are less than 100. When we see a community get into a growth mindset, the next stage for community development and startup and venture capital efforts sees them enter at the consistent annual venture activity of $10 million plus. Oftentimes, we're seeing more than 5 startups funded, and they're creating over 100 jobs. Once you get into the growth scale and hub models for venture capital development, these efforts tend to go from civic, community, or economic development initiatives and into private industry-led solutions that oftentimes occur without the input or even sometimes the knowledge of local economic or civic leaders. In other words, as these systems grow, their need to depend on local economic development budgets and efforts weakens. That's good news because it enables the community to shift its resources to other areas while creating sustainable and highly levered ways to create wealth, jobs, and leaders in community. So how do we get started at a more granular level? Again, as anyone wants to follow up with this, I'm anxious to answer any questions or do one-on-ones through the conference itself. But to get started, it's pretty simple. There's 3 critical commitments. We're just setting potential hypotheticals, but just getting these decisions made in your mind is as important as what numbers you choose. The first is communities can choose to invest 3 to 5 million a year. We think this is about baseline to get running. Split into, let's say, 3 to 5 emerging fund managers. What we find is once communities can convince themselves to give the venture lens model a try, the private sector, foundations, et cetera, will oftentimes invest more into these same fund managers. In other words, from the very outset, communities can lever their efforts to invest into themselves by drawing in additional cash to invest into that community's best and brightest. Second, those funds should be asked to invest in 10 new startups per year at about a $250,000 to $300,000 range. Usually, if a startup's entering the marketplace, and many of the most successful startups of our generation, that's about the dollar amount, $250,000 to $300,000, to get them running for a year. In more developed ecosystems, this number can get bigger. It probably should be bigger. But if you're looking to get running with a relatively low dollar of capital commitment, getting 10 new startups a year is what you probably need. And the minimum to do that is about $250,000 to $300,000. This is another area where how a community asks its founders it's investors, or it's venture capitalists, these new emerging fund managers, to invest locally and inclusively is so critical. And then finally, three, create an education and a networking budget for these fund managers. We didn't want to ask the leaders of any business to go without continuing education or the opportunity to get resources like executive coaches or peer support. This is even more critical in an area where there's so much less institutional muscle in a community. One example that I love and I hope to see communities embrace is create a budget, for example, to send their emerging fund managers to Kauffman Fellows. This is an education program. It's affordable. It's tens of thousands a year per manager. And just as importantly, while those managers are getting educated, they work with the next generation of emerging fund managers that can be resources to invest in your community. Essentially, whatever you spend on educating one of these managers, you'll probably get back 5, 10, maybe more dollars per dollar you put into this budget in people investing back into your community through relationships built in efforts like the Kauffman Fellows. There's a lot of other ways to do this. I'm not trying to single the Kauffman Fellows out as the one-stop shop for that, but I wanted to give the type of specific and vivid opportunity communities have to educate their next generation of fund managers to get better outcomes from whom they choose to invest and how, but also to create relationships that communities can use to import capital to grow wealth, jobs, and leaders. There are additional options that communities that are interested in taking a venture lens can take to facilitate startup and venture growth. We run accelerators. Essentially, this presentation is taking the generator model of how to do this from the bottom up and asking communities to consider implementing it without us. So we believe accelerators could be an important tool. We've tried to take this venture lens approach to the communities that we work with as a partner to manage this and get it off the ground. But we also think that that obscures the broader discussion of there are too few communities that have ever tried a sustainable, measured, intentional way to create a venture capital community from scratch. And as we've tried doing that through our efforts across 24 cities, we've been surprised at how consistently we're able to create transformational change. Thinking of the opportunity to work with accelerators in this model offers another chance to bring in energy and resources, and I hope communities will consider it. Community mentorship programs have been powerful in bringing in my favorite versions, leaders who've left the community to engage in supporting it. Too many communities we meet have seen their best and brightest go to school somewhere else and build tech startups. Reach out to them and ask them to mentor local emerging startups and fund managers. I think it's the type of transformational change that a community can only bring. And it's one example of the type of mentorship program that Communities Convening Power offers. And related to that convening power, civic leaders have the ability to bring in angel groups, to create them, to take their startups to CEOs and other leaders to help engage in revenue growth, boards of directors, the types of inflection points that change a startup's entire trajectory. I'll close with the venture lens offers communities this incredible chance to engage in transformational economic development, to move into action. It's an action model. It offers a baseline and transparency and accountability for all the ecosystem's activities. I see a lot of startup directories. I think we should have execution plans and reports. This model benefits from serendipity. As you're putting 10, 20, 30 startups into motion, you're going to find that 2 or 3 distinguish themselves just like you would in anything. But whenever you ask 20 or 30 of your community's best and brightest to accomplish great things, I think the community starts to position itself to benefit from a little luck and good fortune. And it opens up a bottoms up model for investing into a community that's not built around tax incentives or trying to draw a startup or a large corporation from one to another, but consistently succeeding by being the most passionate about investing into their next generation. Again, this 48-month period, you'll see this transformational change. If you begin in this model, if you allocate some initial venture capital, begin seeing 10 startups get funded a year, track them into national venture capital market terms and networks and resources and milestones, you're going to see a change where suddenly, 1 or 2 things going well every now and then become many things going well every year, and new jobs, new momentum, new leaders will emerge to only add the opportunity for change and positive outcome. Thank you for having us here. It's been a pleasure to get a chance to talk about our experience over the last 9 years and the hopes we have for global communities as they consider being the most passionate about investing into their next generation. It's our company's mission, across our 70 employees in 24 plus cities. We're proud to engage with partners like the cities of Houston and Cleveland, the states of Indiana and Alabama, the universities at the University of Wisconsin-Madison, Nebraska, Minnesota, corporations like Universal Music Group and Microsoft, and many others in creating transformational change. It's been a privilege. I hope these experiences and insights are helpful. If anyone has any questions or follow-up, if you think this is awful, please let me know. I'll send you a beer. But really grateful for the chance to introduce ourselves and would be pleased to take any questions that anyone has, both in this forum, but also I would delight me if someone reached out. I'm Joe Kirgues on LinkedIn, J Kirgues, my last name, J Kirgues at Twitter. Just please send me a note. Really delighted to be here. Thank you to the International Trade Council for inviting us. And again, grateful for any questions or feedback. Thank you.